London, Reuters. World stock markets remained on shaky ground on Thursday as U.S. bond yields crept back toward four-year highs after congressional leaders reached a two-year budget deal to raise government spending by almost $300 billion. While the deal was a rare display of bipartisanship that should stave off a government shutdown, it looks set to widen the U.S. federal deficit further and could fan inflation, prompting the Federal Reserve to lift interest rates faster. Eurozone yields were also higher on the day, while a hawkish message from the Bank of England on interest rates pushed UK stocks down around 1% and lifted yields on UK government bonds to the highest since 2015. All that is keeping equities on tenterhooks. While MSCI Euro Trademark S World Index has risen off two-month lows hit earlier this week, the tentative rebound from Wednesday Euro Trademark S has fizzled. That pushed the index some 0.2% lower, while European bourses were weighed down by commodity and technology stocks. The Pan-European Stoxx 600 share index fell 0.5%, and is still down almost 3% year-to-date. Wall Street too looks set for a weaker session, with U.S. stock futures down around 0.25%, as investors eye the potential for higher inflation and borrowing costs. That has a euro-yen down. The straight-line move on equity markets led to a more volatile environment and limited the potential for equities. A euro François Savary, chief investment officer at wealth manager Prime Partners, said, referring to investors' euro trademark bullishness prior to the recent correction. A euro I don't a euro trademark T think markets can recover immediately from the shock. There needs to be a stabilization phase. A euro. The previous two sessions saw the heaviest volumes traded on the Stoxx 600 index in more than 7 months. Volumes on U.S. exchanges meanwhile exceeded 9 billion shares for a fourth straight day on Wednesday, a figure surpassed just once before in the past 7 months, according to Deutsche Bank. In Asia, MSCI Euro Trademark S index of emerging Asian equities remained near 6-week lows. Focus was on China, where Shanghai Euro Trademark S benchmark index hit a 6-month low after Beijing resumed an outbound investment scheme after a 2-year hiatus, granting licenses to about a dozen global money managers, sources said. Spending soars. The recent sell-off, sparked by last Friday Euro Trademark S jump in Treasury yields, sent the VIX index, considered Wall Street Euro Trademark S Euro fear gauge Euro, spiraling. The index is down just below 30 on Thursday, but that is more than twice the level seen in the past few months. Bond yields got a fresh impetus on Wednesday from U.S. lawmakers saw Euro trademark deal on the budget, with 10-year U.S. yields back up to 2.84%, near Monday Euro trademark S 4-year peak of 2.885%. The fear now is that alongside the economic boost President Donald Trump Euro trademark S tax cut plans may deliver, higher deficit spending could overheat the already strong U.S. economy and accelerate inflation to levels not seen in over a decade. The Senate and the House were both expected to vote on the deal on Thursday. A Euro News yesterday has set up a test for 3% on 10-year Treasury yields, a Euro Savary said. European bond yields also rose, lifted by the prospect of increased fiscal spending after Wednesday Euro trademark S coalition government deal in Germany. UK government bond yields rose too after the Bank of England said interest rates probably needed to rise sooner and by a bit more than it thought 3 months ago, and raised economic growth forecasts for Britain. British 2-year government bond yields rose to the highest since December 2015 after the statement, rising around 6 basis points to 0.706%. Sterling rose around 1% against the dollar and euro.